Hello traders, welcome to a new video on Renko charts. This is a different kind of chart that doesn't use candlesticks, but instead we're using a form of a form of price information in which the average true range is used to calculate a certain amount of price movement for each brick. So let me explain what that means by going on the 1 minute and showing you guys exactly how this works. So the ATR is going to calculate what the average movement of price is. And what it's going to do is this number right here that you see that says 1.5, it is going to create a green for every plus 1.5 price move price has made, and a red minus 1.5 for every down move that price has made, as you can see here. And it cleans the data and it really separates the signal from the noise. That's the main reason why traders use it. So if I go to the 5 minute, you can see that each one of these bricks, as they're called, represents plus 11 in price movement. Now, this kind of chart is not based on time, it is actually based on price. So most charts that you're going to look at are based on time. The x-axis here is going to linearly have time showed. But what this does is you can see that the distance between certain kinds of times can be very strange and very different, as you can see here. I think it's clear to see that the distance between, any 2 points is not the same. So yeah, like the distance between 9 and 10 is not as much as the distance between 10 and 11. The 9th and the 10th is not as the same as the 10th and 11th. The reason that occurs is because between the 10th and 11th, there was more volatility, there was more price movement and price discovery. Therefore, Renko printed more bricks. The 9th and the 10th, we just didn't really have much going on November 9th, so that's why there's less bricks there. Now you may have noticed something really interesting about this, that there's these tails, as you can see here. These tails are when price attempts to continue the trend but then fails. So you can see that, let's just see one here. We have a down move and then we actually had a continued down move here, but then that turned into that. So these kinds of bricks with wicks or bricks with tails are actually pretty good reversal signs for Renko. So if you look at a few here, you can just see, this is a pretty good time to buy, good time to sell. And you can currently see here that this was quite bullish, as you can see, because there was a tail to the downside. This was quite bullish. There was a tail to the downside. And it was bullish until we got this candle here. We finally got a red brick, and we had a wick to the upside. So this was bearish. Now the values that you see here, guys, 8456.5, this kind of coloring 8457, that's the actual price of XBT USD, but this is the Renko price at 8510, or it's also known as just the close price of the previous brick was 8510. So you want to always look at this price as well, this price more importantly, which is the actual XBT USD price. Now here we're using a 74, so each one of these, as you can see, high to low is going to be 74. Now, how you can use this really depends on your kind of trading system. If you look online at articles that advise how to trade off of Renko, a lot of them are going to say either use the wicks or more popularly, can't speak today, is you identify a strong down move or a strong up move, a strong trend, then you wait for the Renko to go in the other direction, and then once you get a confirmation of continuation of that trend, that can be a spot to enter. So what that means is that if I identify an overall uptrend, boom, I see a little retracement here, and then once we get that uptrend continuing, that could be a time to buy, and price does go 3.8% higher. And my exit could be based on when I see a red candle. Now, something like this, we see prices in a strong downtrend, okay. We see a green, and then we see a red with a tail as well, and we have a good amount of volume. So you can see on this candle here. And this would have been a great spot to short, and price goes down about 15.4%. Some other examples here, price goes up, this would be a potential spot to enter for a long. Price goes down, you wait for the confirmation of the trend to continue. Right there it happens, and then price continues to go higher, as you can see here. This is on the 1 hour, but let's go look at a more shorter term, which would give you more trades, to be honest. So what we see here is, so one example here, we see a downtrend, and then we see retracement here. We see continuation of the trend, and this could be a spot to enter. This would have been a little bit more tricky, to be honest. We see a downtrend, or you could even call this an uptrend with a retracement, but whatever you call it, price moves down and then price moves up. But then once price moves red, you may have sold here or you may have sold here. Maybe that would have turned out okay. Maybe it wouldn't have. I don't know your risk management for your trade, but this could have potentially been problematic, as you can see there. This ATR is now at 11. I mean the brick size. So that's every $11 of a price move is going to be reported. So now what we see here is a downtrend, but we're seeing these green Renkos. So if I can see another red, then that could be a sign that price could go lower. You could try using this on the 1 minute. This is very short term. But the good news on the 1 minute is that you can get kind of beautiful patterns like this, really, where if I go to a candlestick chart, okay, prepare your eyes. Yeah, it looks very, very different. Okay, I'm going back to my safe space here in Renko. So what we see here is, wow, look at that down move. That's every 1.5 dollars move of XBT USD. But here we could see the time to enter would have been here, just about. So that's an 84.52 entry. And if we're going to exit on any red candle that we see in the future, let's go do that right now. Well, price goes up here, in the 1 minute, and then price goes down here, about 84.72. So that would have been a not a lot of money to be made, not a lot of profit, but about 0.25% minus fees, as you can see there. And I think that the best trade probably would have come from a short here. The reason I say that is you can see that this looks quite strong, and if you thought that this was quite a strong downtrend and that the price would continue moving down, you could have shorted on the after the retracement continuation move, which was here, as you can see. And had you done that and then gotten out in the first green, that would have been about a 0.46%. Again, the percents are smaller because I'm using a 1 minute. Of course, you can use any minute that you want. That's all up to you. But you can see sometimes where we get that retracement pullback, time to short, time to short, or we get some retracement here, time to go long. You can also combine this with technical indicators as well, or other kinds of indications if you want. And just for laughs, let's look at some other coins here. Let's go take a look at Ethereum. So Ethereum does look to be a little bit more choppy, especially around here. But it looks like we had some pretty nice trends emerging here. We had some pretty nice Renko wicks, such as here. That's going to tell me this is quite bearish. And once we get a Renko wick to the downside, that's going to tell me that we're bullish. Price does go up. Renko wick to the upside, that's bearish. So you can see Renko wick to the upside, that's bearish, and price does go lower. But what I want to look at is, let's look at a coin like BNB BTC, and how does this have, what kind of Renko are we looking at with a 5 minute? Yeah, again, this one's not as pretty, I would say. I mean, this could have been a spot to short. This could be a spot to long. I mean, but this is all not really like very, very clean candles. How about Ethereum to Bitcoin? Really not that clean either. XRP? Cleaner, but not as beautiful as the good old XBT USD. What about ONT BTC? You can see just how different this is going to look from, yeah. So you do have to be really, really careful when you're using Renko, and you really have to understand how this is calculated and what's actually going on. Because if you don't, then you could be in some trouble. But I think that Renko is a good method if you want to just simplify trading. Is it the method that I would use? Probably not. I do prefer just to look at candlesticks. I know it's more information, but it's information that I need in order to make my decisions. So that's why I prefer to use it. But there are a ton of Renko strategies that I didn't go over today, especially Renko strategies that combine with other indicators that I did not talk about today. And you can also use volume spikes as well, such as this volume spike here for entry and reversal points. Because typically when there's a volume spike, price tends to reverse or retrace. So volume spike here, you see a green, you may not be thinking about shorting here in a continuation of the downtrend because you see a volume spike. And that could be one of the issues with this kind of trading, is we don't always know when the trend's going to continue or when the trend's going to stop. And you may say, okay, so this would have been a great spot to short with this continuation, of course. But we don't want to get faked out. And to not get faked out, you can look at volume spikes to signify reversals. All right, guys, that's going to be it for me today. You can get these Renko charts on TradingView. I think that they're only for premium users or for Pro Plus users or something like that. But you can also try to find these online if you guys use other kinds of websites. They may have Renko as well. But for the time being, this is TradingView, and it looks pretty clean to me. But as always, happy trading, and go check out Renko.